Ladies and gentlemen, Kim here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is up about 1.7% there. On the S&P, Nasdaq did about 3%. Semiconductor with a 5% gainer there. Dow up a little bit. However, small caps made a move, 3% positive. Transport 1.7. Banks up, energy up, but slightly there. Biotech made a move today, 3%. Healthcare up 0.6. Home builders up 2.5, utilities 2%, retail 4%, emerging market up 3.3% there, Bitcoin up 2%, gold, silver miners are up. Notably though, miners did make a move, 3% positive. Looks like dollar down, dollar down, oil up, treasury bond down. VIX is also down there. Let's go to the S&P 500 ETF. Spider, 65-minute chart here, so. This is where we closed on Friday, and this is where we opened up today. So we slightly gapped down, but here, this is a level that we've been talking about, and something that I talked about the entire week last week, right? We need to see a follow through from these tunas, man. They gotta find that momentum, gotta find that footing, right? That's what we've been talking about the entire week last week. And market was not able to find that momentum after this kind of move that we saw, right? So we came down, deteriorated. But what we did talk about on Friday, when I put out in my weekend video, is that we do have that subtle higher low. Instead of this market coming all the way back down to the lows, what buyers are trying to do is see if they can kind of put this into a perspective. And so that cultivate, before we can establish its own uptrend, right? We need that higher low. So we made sure the buyers made sure the price didn't go all the way down to the lows right here around 420, but we stopped short around 428 or 430 or so, and then made a way because we closed right on that resistance on Friday, just so that people will be guessing how the market is gonna play out. Today when we opened up, we slightly gapped down, a little bit of fluctuations right in the morning, right out of the gate. But we see that thrust to the upside above 440s, right? That resistance level, and that was it. Market continued to march a second, third, fourth, fifth, sixth. All day long, this market was bright green. And so you can see it now for the first time, this entire down move, right? Since the early days of this month, January 2022, this is the first time market has established that higher low and that higher high. And that's a very, very good cultivation from the buyers. Not only that, with the move today on the last hour, there was a little bit of fluctuation. I was actually watching this. So what happened was on the last hour, we pushed it up a little bit and we started coming back down. You see that lower wick right there, right? That represents the weakness on the last hour trading session. So there was a red candle there. Guess where we kind of came down to in that micro term support? It actually utilized that short-term moving average as a micro-term. So we can see that act as a resistance here. And very, very quickly with that lower wick, buyers utilize it as a micro-term support. And I'm not sure if we're going to see a follow-through, we're going to retest, we're going to break below it. But as of now, as of this moment, we do see that bounce from there. Because I remember at one point, S&P 500 was up close like 0.8, 0.9% on the last hour. So that 0.8, almost a 1% move was made on that last push. So what can we expect going into tomorrow? So we do have all the momentum here, micro to short term, right? We got that higher lows and higher highs. We see that breakout, the follow through. We did even break above my short term moving average, first time since, a mid-January. So we have all the momentum, all the confidence. Buyers starting to know, buyers starting to feel what it's like to be in control. But keep in mind though, we do have my midterm and my long-term moving average just above, and not to mention this down gap still open. So what the buyers need to do as quickly as possible, remember the tunas, what the buyers need to do is that they need to continue with this momentum and get up here as quickly as possible and fill that down gap and make a way for the bulls go after the new all-time highs. However, in the short to micro term, I do want to give benefit of the doubt to the buyers because we do have that cultivation of higher lows and higher highs. However, in the short to mid term, we still are in the vicinity of lower high, you see. So bears are not quite gone yet. They can still come around as soon as they see any weakness from the buyers. If they can sense that bulls are tired, they will come. And looking at my oscillator here, we are hitting that overbought. First of all, I want to tell you this. First of all, we are seeing bulls flexing its muscle all the way to the top of his band. And that's a good sign. This is exactly what the bulls needed to see. See, bulls don't want to see any of this. You see these where it like doesn't go all the way to the top and it starts to kind of fizzle. There's a more weakness gonna come. So by putting the oscillator all the way to the top, what the bulls can now do is have the oscillator move sideways like this and make an upside move and then go up and fill that gap. That's what bulls need to do. But because we are in the mid to short term downtrend with these lower highs and vicinity of lower highs somewhere in that vicinity, if there is any kind of weakness from the bulls, if bulls start to show that they're a little bit fatigued at this level, they're kind of tired in this vicinity, bears are gonna come and exploit that because bears are still around. Remember, my midterm and long-term moving averages are above and the down gap still hasn't been filled. So bears are not going anywhere until those levels are reclaimed. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening and glove training tomorrow.